Hello everyone, my name is Deniz Senyurt. I work as a commercial real estate investment advisor. About 2 months ago, while we were in total shutdown, I shared with you my insights about Washington, D.C. metro area commercial real estate market. Given that we are moving into phase 3 and opening for business, I decided that it is time for me to share you some update about the commercial real estate market of Washington, D.C. metro area. Today, I'm going to talk about multifamily portion of it and focus my presentation on that type of property. For other type of properties, please check out my blog. There you will find information about other type of properties like retail, industrial, office, and office space, office market. As I said, we have been going through unprecedented times. Everything we know has changed in commercial real estate. In commercial real estate, we classify property types in 4 categories: retail, office, multifamily, and industrial. In this presentation, I'm going to focus on multifamily type of properties. If you're interested in other type of properties like retail, office, and industrial, please check out my blog at my website, which is mylocationadvisors.com or denizsenyurt.com, and you will find more information and more posts about those type of properties as well. Multifamily. Washington was emerging as one of the strongest apartment markets in the country before the coronavirus pandemic. Stronger renter household, a healthy job market, and costly homeownership underlined Washington's strong multifamily performance. Washington is also one of the most insulated markets in the country, as its economy isn't as concentrated as concentrated in high-risk sectors like leisure and hospitality and energy, and it is supported by the federal government. Those demand drivers are still in place. But with this pandemic, those positive numbers are eroding by each day. According to CoStar, vacancy is rising and rents decelerating because of the continued supply of multifamily type of properties and weakened demand for multifamily properties. Washington, D.C. vacancy rate is, for the multifamily, is 7% right now, but it is forecasted to increase to the level of 8 to 11% during the downturn, and we expect that it will require a couple of years to recover. As for the rent growth, we see 1.2% drop in Washington, D.C. market over the last year as well. As for the investment in multifamily buildings, if we compare the last 6 months multifamily property sales with the same term of last year, we see that the sales volume decreased from $4.2 billion to $1.9 billion. Average cap rate is also decreased to 5.6%, and sales price per unit has also dropped to $217,000 per unit. According to the National Multi-Housing Council, rent collections in the month of May improved by 1.5% compared to April 2020. And looking back to May 9, 2019 versus 2020, May 2020, rent collections are only off by 1.5%. So we can say that multifamily property owners are doing so far just fine, and we were expecting more delinquencies in rent payment, and this chart shows us that this is not happening, and people are paying for their rents in time, and it is almost as same as it is a year before, so they are just doing fine in rent collections in multifamily in Washington, D.C. metro area. So, in summary, what we learned. On a negative note, we expect to see increase in vacancies up to 8% to 11% due to job losses and decrease in foreign students and foreign visitors to Washington, D.C. metro area. Also, we expect to see increase in unemployment, and which will lead to house sharing, or children might return back to their parents' homes. Considerable decrease in deal numbers due to uncertainty in financing and economic conditions. Luxury market will be hit the most. Financing difficulty, we are going to experience a little bit. The reason behind that, government is actually providing the funds to finance the deals, but the underwriters having difficult time pricing the risk associated with the property, because when you appraise a property, make a decision on it to finance or not to finance, they have to look into the comparables, and it is now difficult for to find a comparable, because you cannot compare the property sold before COVID-19 and compare to the property selling now in COVID-19 pandemic procedure. So it's kind of their underwriters having difficult time to price out that risk, and they don't also know what's going to happen in the future. Everybody is looking for the data, trying to understand the market. That's why actually I'm trying to put together this information for you. While you are making a decision, you will have more information and make an educated decision on your investment decisions. And on the positive note, we don't see much change in rental rates if the market recover quickly. As long as federal government health and defense contracts are funded, we might be okay. And we see little to no sign of delinquencies, as I mentioned before. In rent payments, this means cap rates might decrease, prices will increase, and downsizing might lead to increase in demand for apartments. That said, with this presentation, I wanted to share with you my insights about Washington, D.C. multifamily property market, and I hope this was helpful for you. I actually primarily work on the multifamily type of properties, and I would love to help you if you need any help in selling your multifamily property or buying one as an investment. And if you need more information, please give me a call. My phone number is 571-271-6604, and I look forward to hearing from you. Thank you so much. Have a wonderful day.